what's up guys? Welcome to the Momentum Trading Lab. Please remember to hit that like and subscribe, and let's get into it. Alright, so I've got some stuff on my chart. I'm gonna delete everything and then we'll have a fresh look at the chart. So let's delete everything. And then I'm gonna start on the daily chart. Okay, so the momentum is starting to get topped out a little bit. And the money flow is above the RSI, but we still have the strength oversold and pointing to the upside. We did pass this imbalance right here, so this could become a inversion fair value gap. We'll have to see. We broke through it, so it could come down, test this area, and then continue to the next imbalance. Alright, so on the daily chart, we have this imbalance. And let's also pull a Fibonacci from this high to the low. Getting rejected right there at the 0.706, so basically an OTE entry. So you would kind of expect a little bit of downside from here on the daily chart, perhaps towards the equilibrium for this little leg to the upside. There's also a order block candle right here, so this level is at 14,989. Also get a Fibonacci on this. Alright, so that order block, the top of the order block sits exactly at the equilibrium, so there's a little bit of confluence. So if this fair value gap doesn't hold as an inversion fair value gap, then I think it's likely we come and visit this area. And then also let's have a look at the mean threshold for this candle. Okay, so the mean threshold is just above the OTE, so it's basically just in between the Fibonacci golden pocket and the 0.706. Okay, so I have my eyes on this level right here on a daily perspective. And like we said, some of the oscillators on the Momentum Master B on the daily chart is starting to get overextended. Alright, and then just something else to keep in mind is that we have these relative equal lows right there. So this is sell side liquidity. And this is on the daily chart, so this will be a major sell side liquidity pool. And let's also add relative equal lows. Relative equal lows on daily. Okay, and this level is at 14,586. Extend it a little bit. Okay, let's go down one time frame, see what's happening on the 4-hour. Okay, so I'm just gonna go up one more. I just want to set the visibility on this so that it only displays on the daily chart for now. Okay, I didn't do that right. Current interval only. Okay. Right, so because I want to have a look at this one, so I basically want to refine the imbalance on the daily to the 4-hour. And so it's pretty interesting. The 4-hour has not closed a candle above this imbalance. So a closer look, the Momentum Master B money flow is above the RSI and far away from it. And then the money flow is also in the overbought territory. And then the momentum is also starting to point to the downside. And then the strength indication, the Williams, is also overbought. Okay, so we have some equal highs right here. So this could be to induce people to go short and see this as resistance. And then they would hide their stops above this level. So we could just see a liquidity rate of this level and then perhaps continue to the downside. Let's see what else is here. So we tapped into that order block in yesterday's stream. We aligned. Let's quickly do it again. These are the mean threshold of the bearish order block candle on the 4-hour. So here we have two consecutive up close candles and then a move down that took out the low of this up close candle, and then we had the displacement to the downside that left the imbalance. So this is a valid bearish order block, and then we tapped into that level 3 times, got rejected all 3 times. But now, like we said, we have the relative equal highs printing. So this will be buy side liquidity above these highs, so they could kind of just stab it into this area to clear out the buy stops in this area and then displace it to the downside, and then we will look for entries in that area. At that point, this will become our higher time frame point of interest. If we get that bearish market structure shift on the 4-hour that leaves a fair value gap, then we will be looking for a premium PD array for our short position. So basically Fibonacci, wait for it to retrace towards the equilibrium, and then you can refine your point of interest in a PD array. So some sort of fair value gap or a bearish order block in this area, in the premium area, and then you can frame your entry idea from that level right there. So for me, this level is just too clean. Normally they won't keep these clean levels in place like that. So this is basically kind of to induce people to go short and hide their stop losses for that short position in this area, and then they'll push it into this area. So then the larger players that need lots of liquidity to fill their positions will then basically take over all of the liquidity above this area. So if somebody goes short and they put a stop right there, this is a promise to buy. So if they push price to the upside, then a whale can sell or go short and use that buy stops as liquidity for his own short position, and then it will likely move down to sell side liquidity or some sort of imbalance below. All right, so we could kind of see that. So that's something to look out for. And then, like we said, on the Momentum Master P, everything is topped out and pointing to the downside. Oh, and then one thing before I forget, and we have the FOMC meeting minutes in 45 minutes. So I'll basically just be observing price action until then. And then about 30 minutes after the announcement, we will still be in the silver bullet time window. Then I'll be looking for potential entries. So the FOMC meeting minutes could invalidate all of this TA, but this should give us a general idea of where the liquidity pools are, because they will basically use the news event as a tool for manipulation. So they will basically run liquidity on either side of the range before you will actually kind of see the real move. So kind of from 2:30 New York time would be the ideal time to get back or start looking for your entry model to form. Then most of the manipulation should be done for. All right, so 4-hour relative equal highs, buy side liquidity right there. Then we have a low right here. So on this candle, we have the low at about 15,174. Then on either side, we have higher lows. So this is a confirmed higher low. So sell side liquidity below this low. Sell side liquidity. And then we also have this imbalance right there. So fair value gap on the 4-hour chart. So this looks like a pretty strong draw on liquidity. And then also provided we have the relative equal highs. So this could set up for a nice entry model, rate the liquidity, look for a market structure shift, and then run it towards this area right here, towards the opposing liquidity. So that's something to look out for. And then let's also pull a Fibonacci for this leg to the upside. So we'll use this low towards the high. Okay, so we have three things pointing towards this level. First of all, we have the high of the fair value gap right there. Then we have the low of this candle, and below this low will be sell side liquidity, and it is also the equilibrium for this little leg to the upside. So this is definitely a good area to take profit on yours if you go short from this area. And then in this area, we could then potentially go long again, provided on the lower term time frames we get the bullish market structure shift and all of those things. All right, so a couple of things pointing to a bit of downside. We also we took the previous day high. I like just calling this PDH, previous day high, and see we didn't displace past this high. We just tapped into that zone, knocked out some buy stops, and then started to move towards the downside. So we could kind of make the assumption that they took buy side, that they would now want to see price action move to the opposing liquidity pool. And we have one right there, and the imbalance as well. So this is a logical area that I think they will take price action to. So it looks like it's going to the downside right now. So let's go down one time frame to the 1 hour. So we have these equal lows inside of an imbalance on the 1 hour. So the relative equal lows right there. With an imbalance between the high of this candle and the low of that candle. So fair value gap is a 3 candle formation. So for a bullish fair value gap, it is the area between this candle's high and that candle's low. So you will see there's nothing traded through that area. So that is your fair value gap. So we have an imbalance and liquidity. So we are starting to move below this low. So let's see if we just tap into below this low and start to get a reaction to the upside, then they could be reversing it back towards this liquidity before taking it down to the major sell side liquidity pool below this low. And like we mentioned, we have this imbalance on the 4 hour, and we can also actually just refine this to the 1 hour. Just move it up there. So that will be the imbalance. And that fits in nicely just in between the equilibrium, which is the 0.5 on your Fibonacci, and the Fibonacci golden pocket. And there we have the 7060 OTE entry. All right, so for me personally, I would like to see us first go up into the equal highs right here, and then look for the short position, and then potentially your final target will be this area right here. But we'll see if it starts to move down without going into this area. Then the idea would be we wait for price action to dip into this liquidity pool and then displace out of this to the upside and go to the 5 minute and lower for that market structure shift and an imbalance. And then you go long from that imbalance after the market structure shift. And then these highs will be the ideal target for that long position that you take from this area. Okay, let's have a look at the momentum master. Okay, so the momentum is resetting, which is this wave. And then we have the money flow below the RSI, and it's kind of starting to curve a little bit. Strength still pointing to the downside. Yeah, so for me, it's a little bit indecisive. I want to see how it reacts when we get below this low. Is it just going to tap into it and move away? Then it's likely they first come into this liquidity pool before pushing it to the sell side liquidity below this low, and at the same time come into this area to reprice this imbalance. So quick look at the 15-minute. Okay, there you see the equal highs as well. Made a nice imbalance right there and then just tapped into it. And then started to move down. That's the low that we are watching right now to see how it's going to react. So for me, kind of, we are just floating in the middle of the range. So from the high to the low. So ideally you want to short from somewhere in this area, potentially long from somewhere in that area. So right here it's kind of just a little bit indecisive. 15-minute, let's have a look at the momentum master. The momentum is resetting, but you'll see it's still pointing to the downside. The MACD is coming down, and then the Williams is resetting, but it's still pointing down. And then we have the money flow above the RSI, which is a bearish indication. Right, so a little bit unclear. Like I said, if we look at price action and we take this as the range, it's just kind of floating around. And this is probably in anticipation of the FOMC meeting minutes, which comes out in about 26 minutes from now. All right, so let's have a quick look at the dollar index. Start at the daily. Okay, so yesterday we kind of said that it seemed likely that they will induce long liquidity. So I mentioned that they will probably just kind of float around in here, accumulate, and then just do the manipulation, knock out the sell side liquidity. And that is kind of what happened. So let's go down one time frame. So this was just a rate of liquidity. Then they shifted it to the upside. So after taking the buy side liquidity, it seems likely that they would want to move it towards buy side liquidity. We have a high right there. Quickly go back to the daily. Okay, so the dollar index on the daily, the momentum master B, all the oscillators, the momentum is overbought. The Williams is getting there. It still has a little bit of room left to go to the downside. MACD is still going down. RSI is about in the middle. No clear signs of any divergences on this time frame. Okay, so on the daily, you can also see it tapped into the sell side liquidity. We had a low right there. And then the previous day's low right there. Took out both of them. Did not displace below this level. So that is an indication that this was just a raid of the sell side. Now getting a nice big green candle. Okay, the 4-hour wants to make a push. You see a little bit of a divergence on the strength indication. So we have a low and then just slightly, but it is higher. So that's a higher low. Here we have a low and a lower low. So this is a bullish divergence, which indicates that this trend that we had, this bearish market structure, could potentially now reverse. So that is the last lower high. So it needs to displace above this high to shift back into bullish market structure. At this level right here. So remove that. Okay, so it needs to displace above that level. Then come back, potentially back into a discount for this little impulse that it will create, and then it will probably continue to the upside towards the buy side liquidity pools that will build up above these highs. Okay, that's the 4-hour. The 4 hour does look pretty bullish on the momentum master. We've got this divergence, momentum pushing to the upside, and then this MACD is just flipping bullish right now. A closer look. You see the purple line flip blue and is now crossing the yellow line. Go look at the RSI, and RSI starting to aggressively point to the upside. So it looks like the Dixie wants to go towards this high, which is at 106.248. See what the 1 hour is doing. Okay, so the 1 hour, it just did a little bit of a liquidity rate above this high, so no displacement above this high. So tapped into it, aggressively moved down into the sell side liquidity. Now it's moving away, but it's not flipped into bullish market structure yet. A little bit of an imbalance right there. Momentum pushing up. The Williams, the strength indication, and the MACD is pushing up. Let's see what the 15-minute is doing. Okay, so 15-minute broke through this little bearish fair value gap. Broke through it, came back, kind of tested it as support. So even the dollar is just kind of chopping around in anticipation of the meeting minutes in about 30 minutes from now. All right, so let's quickly go back to the Nasdaq. Okay, so just kind of the score, deleting some of this. So what I like to do is, and in anticipation of these big high impact news events, it'll kind of chop around. So a lot of the guys in the Momentum Master Discord, you get access to it if you get the Momentum Master P. If you want to check it out, the link is in the description. And we do have a 20% discount if you use my link and coupon code. So a lot of the guys call this an idiot box. So it's idiot boxing, but what it's actually doing is just inducing liquidity on either side of the range. So buy side above these highs, sell side below the lows. Okay, so how I normally look at this is when it chops around like this, then a lot of the times the first move out is the false move. So it will knock out the liquidity and then it will start to break down towards this liquidity pool. But then it will also go towards the low of the range. So this is our range, right? So this is like a seek and destroy pattern. And then go for the liquidity at the high. So it will be something like this. So this is an example if they first go into buy side before running the sell side. So they could also obviously take it to the sell side first. And then maybe something like this. Then basically it all of the liquidity pools before just at the end of the day finally just dropping around again until tomorrow's trading day. We have Bob Marley in the chat and we have some horse people in the chat. What's up guys? I hope everyone is doing well. I'm just chilling. I haven't I watched the level earlier today. It didn't really come back to my level. Then I left my little trading office and went to go and do other things. And now I'm basically aiming for the sort of seek and destroy pattern during the FOMC meeting minutes. So it's just kind of idiot boxing, as you guys say in the Momentum Master Discord. So I think it will chop around a bit, induce liquidity. Then the first move out will be the false move, and then take it to the opposing liquidity pool. So we'll have to see. Alrighty, I think that's it for me, guys. I'm gonna take a short break from my computer and then come back for the FOMC meeting minutes. 27 minutes to go, and then about 30 minutes after the FOMC, then the manipulation should be done, and then I'm going to be looking for the real setup. But the main thing I'm looking for is this seek and destroy. So as soon as it dips out of the box, we can try and play this, run it toward that liquidity pool, then short from there into the other opposing liquidity pool. So seek and destroy pattern. All right. Thank you guys very much for everyone that joined. If you haven't already, please remember to hit that like and subscribe. And then I will see you guys in the Discord. I hope everyone has a great day. Thank you.